Gene, how alarming is this to you?
Surprisingly, it's not alarming, and I want to put into some context, some historical context, is that the supply chain, when there's early feedback, this is still early in the quarter, these tend not to be good indicators. And the reason is that Apple already gave their guidance on November 1st, so 2 weeks after we're hearing these supply chain cuts. It's not alarming because what we're hearing from these 4 suppliers that you mentioned, those comments are already reflected in Apple's guidance for the December quarter. So this should not be anything new. And my history on trying to figure out the supply chain data points is that this is clearly more of an art than a science. And one thing that's important to know is every year going into a cycle, Apple tells their suppliers they need to produce more than they actually will have orders for. And then every year they cut orders going into this period. So this is nothing new, Emily.
Shares have come back a bit, but in general, how confident are you that the latest lineup of iPhones has been a hit? Or is that not the question to be asking anymore as they transition to a services company?
I'm in the camp that that's the right question to ask is, can they grow the base of iPhones in the low single digits? And I think that they're still on track to do that. I suspect that over the next 12 months, they'll probably increase the base by about 3%. It's not about a big hit iPhone. It's about maintaining the base and finding ways to grow from that. One way they can grow from that is by increasing ASPs, which we've seen over the past year, and that will continue over the next year. Another way is by selling services. And so I think that that's the broader, bigger question. And I suspect that the street is slowly, it will take a year plus, adopt this view that the overall Apple business operates like a service. The hardware included has some predictability that historically hardware companies did not have, but Apple's iPhone business over the years will start to yield a more predictable trajectory.
So looking at the stock chart here, you can see the slide since, around when the new iPhones were unveiled. We know this is a company that has been dependent on iPhone sales. Going forward, do you see a point when services revenue is equal to iPhone revenue?
Probably a long time away. It's 15% of revenue right now. In 4 years, we expect it to be 20%. That compares to the iPhone going from, call it, 65% of revenue down to 60. So there's still going to be a big gap there, Emily. I think ultimately is, though, this idea, the real emphasis here is this, is that just to conceptualize that the hardware business is operating like a software services type of a business. And I think that's the real inflection opportunity around the stock. And I think that that can pave the way that this is, we're going to look back and this is be considered a buying window for long-term investors.
They're now well off that $1 trillion market cap milestone that they recently passed. Do you think investors aren't getting it?
I don't think investors are getting it. I think that this concern and anxiety about the health of the iPhone franchise is misplaced. I understand that there are 3 factors that played into it. One is the overall market. Second is Apple giving less disclosures about the iPhone units or no longer giving disclosure on iPhone units. And I think the third is what we're hearing in the supply chain. But I think this has caused the street to fundamentally miss the story. And again, I believe that the iPhone franchise is intact. I think that the chatter from the channel is essentially already priced into Apple's December expectations. And the other piece that I think investors don't get is that this story, trading at, call it 13 times, trades below Clorox or Coca-Cola, which is closer to 20, 22 times. And I think that at a minimum, it should be on par with those 2 type of consumer staple companies, because in fact, that's what Apple has become, as a consumer staples company.
What about globally? We know in India, for example, that Apple has sort of failed to break into that market in any significant way. In China, there's concern about these trade tensions, and the iPhone is just so much more expensive than many other phones out there now that we're talking $50 phones. Are you concerned that Apple won't be able to keep up with the global competition, or is the iPhone always going to be the most sort of desirable and aspirational phone out there?
I think that Apple's going to continue to be that leading edge. I think that, call it 20% of the population is going to want to pay up for a better experience. As you said, a lot of people can't afford this. India and China are two different stories. On the China story, I still am confident that despite the availability of, as you talked about, $50 alternatives, a much different competitive environment than really any other market that Apple competes in. Despite that more difficult competitive environment, I think just the sheer size of the opportunity in China still renders this an incremental positive for the Apple story in the years to come. There's just a lot of people who do make a lot of money in China who can afford these more expensive iPhones. India is a different story. This has been needling at Apple for a long time, and I still don't see the path where Apple is going to get meaningful traction in India. They just simply don't have the brand in India that they have in the rest of the world.